Welcome to Successful Tradings. In this morning video regarding the pre-market analysis for October 7, 2024, we are going to share a little bit of knowledge, because here we believe that knowledge triggers awareness, awareness spotlights opportunity, opportunity engage with preparation, create desired results. So we have been a channel where we want to give you education as much as possible on how to become a successful trader. So we are going to take a look at Friday, how we managed to make a decent profit on QQQ trade, and then how can we apply the same thing today in a little bit of a different type of environment. So without any further ado, let us go ahead and dive in. All right, so knowledge to become a successful trader. So I'm going to go here. I have this screen capture of QQQ looking at the 15-minute interval. That's typical here, as you know. If you do not, again, that's knowledge that we can impart onto you through a one-on-one coaching session. So Friday, the scenario was as follows for QQQ. So there was a gap to 487.88 at the open. So as you can see on the screen there, this has a specific characteristic. We love this setup here. In terms of setup, that's if we had a choice what we want to trade, specifically on QQQ or any stock for that matter, gap ups, because gap up are scenarios where really only two things can happen. Either the momentum of the gap up will continue, or it will reverse. And in both of those scenarios, if you do not know, we are giving you the knowledge that it's a slam dunk to make money trading options. In this case, 0 DTE will rule here. Definitely they are in effect. So the other thing that we need to know a little bit is the ATR. Yeah, so if you don't know about the ATR, average true range, I have a video that I will definitely include in the description of this channel, but this is a fundamental technique to master to put in your arsenal for trading options, specifically on QQQ, but the ATR is a concept that applies for any stock, right? So at 487.88 gap up, we really didn't have to be that fancy. So we decided to take puts on here, and we traded the 481 puts on that day. I think the 481 puts was able to grab them for just north of 50 cents, our standard price that we love here. I think they were going actually for a while, for the first 5 to 10 minutes, really, you had an opportunity to get them maybe as low as 55 cents or 60 cents for that matter. So let's say 60 cents. So just these 3 candles, actually 1, 2, 3 candles, because yeah, this was defined, this range that you see here, this entire daily range of about $5.50 or so, yeah, for $5.55 took place in the first 15 minutes. So this contract, the 481 contract, went from 55 cents, 60 cents, you could have gotten them even to 70, but in a matter of 45 minutes, because each one of these is 15-minute candle, right, as you can see here. So they went to as high as $2.30. So this is the type of trade that's with this type of knowledge. Knowing that, what did we need to know here? We need to know that the average ATR, so this is this here is on the 15 minutes, so the ATR depend on the time interval, right? So this is on the 15-minute interval. So the ATR for QQQ is about 7. I will show that to you shortly when we go on the live chart on the daily. So on the daily, if you're expecting $7 here, you could have traded the 480 all the way to the 480. How am I getting 480 from 487? 487 minus 7, which is the current daily ATR of QQQ. So let me write here daily ATR. You can check this ATR 14 period. That is right. So that's the standard that we use, equal $7 or so. I think it's 7.1 or whatever, but really doesn't matter. So in this case here, this is a whooping. Let's count how many. So if you go from 60 to 120, that will be 100. I'm doing this on purpose because sometimes I have people who will say, hey, how do you get to that? So from 120 to 180, that will be 200% profit, right? So And almost, if we were to go 180 to 240 by adding 60, that would have been 300. So in terms of profit here, you are sitting somewhere here in between, just shy of 300%. And in this case, we traded directional. We traded directional exactly as we do on our watch list, our weekly watch list. For those who are not familiar with it, again, another opportunity to acquire knowledge through our one-on-one coaching. So straight up on here, let's say, yeah, easily 250% on a 45-minute interval. These two things you know, definitely the ATR, but also have the knowledge of what are the conditions that we need to see on QQQ to feel confident about trading this. Yeah, we have developed a technique on how to trade QQQ on any type of gap. In this scenario, it was a gap up, which we love. Yeah, with the gap up because the close was here, and we gap up all the way, actually all the way over here because it's a red candle. Yeah, but this we can apply on any type of gap. So let's go today, apply this knowledge. Today is Monday. I do not expect because one of those having a little bit of knowledge, I do not expect maybe this is the live charts here. And let's say if I switch to the daily to get you the ATR, here we go, ATR 7.12 of the yellow line above the RSI. So the expectation here today on QQQ was that, oh, maybe they're not going to be that much. Why am I saying that? Because earnings starts on Friday with the banks, and Thursday, most likely, with the CPI data, we're going to have a lot of movement. But today, let's say, conservatively, we go with the hypothesis that we are going to get a $4 to $5 move. How are we going to trade that? In this case, instead of trading directionally, I will come here to my option chain and decide, okay, currently in the pre-markets, we are trading at 485 or so. I think we even went to 484 at some point. So if I come on here, I can find two strike price, one on the call side and then the other one on the put side. Let's start with the put side here. So on the put side, if I'm currently trading at 485 or so, I can target this contract, the 481 contract. This is very conservative in terms of that ATR because here I'm assuming that, hey, the move for today, if it's on the downside, is going to be less than $6. So for me, positioning myself at 481 is a great position to be. And on the call side, 485, I can go all the way to say, hey, I'm going to target maybe the 489 or the 490 and put together what is called a strangle. Yeah. One of these two trades, either the call or the side, is likely to make you more than 200%. Should that be the case, your overall trade, you will be making 100% at least. This is a very simple technique, methodology to take advantage of even the slightest, the lowest type of movement, daily movement, trading 0 DTE, because this is October 7. The cost on here for each one of these is going to be in the 50-cent range, not more than that. So, and hence, should the move be bigger than the ATR? So let's say you are trading here on expecting a $4 to $5 range, and then it trade all the way to its ATR in either direction, my friend. That's where you start making the 400%, the 500% and above. Yes, that's required patience, but there's definitely something that you have seen. So a week here where we are going to be very patient because we know that the back end of the week is loaded with opportunity. Earning season is starting, so you know with the gangster trade and all of the setup that we have. But I want to reiterate: should you be a beginner, seek knowledge. One of those ways to seek knowledge, I can encourage you to set up, let's say, paper trading, option paper trading. I think even Webull that I'm using here has that feature nowadays. And actually, you start setting up these simple techniques to see, because with the paper trade, there's no pressure, and you just use that for learning and confirming the strategy which that you are about to embark on. Thank you very much. We will see you on the next episode. Bye-bye.